Alright, good afternoon everybody. Today is Wednesday, the 24th day of September 2025. I have the screenshot here just to show you that, I've been working on this thing now for a little while, and I've as usually happens with me, I have ideas and then I have more ideas and then I have more ideas and then I have more ideas. And so now you can see it's morphed into 3 different choices you can choose from right there. And you gotta put in your password, of course, and then you can choose to have lines on the chart or not. Like that green line right there means you buy the open of the next bar. For anybody who doesn't know, there's a free trial. You go to tvtrades.com right here, tv-trades.com to take the free trial. Okay, and let's go back here first. You go to tvtrades.com to take the free trial. We have some new features. The results have been really great. I'm going to trade it today. You guys will trade it with me. I don't have the midpoint on here because the midpoint doesn't really come into play with this. Last week's meeting we made $8,500 with 10 contracts or 850 with just one contract. Most of that was on the ES. Alright, so without further ado, basically what I'm looking for here is for weakness down here. Now I'm going to do a couple of things. Last week, this is what I was working with last week. Okay, when I showed it to you last week, I was looking for weakness in the middle. You guys remember? I was looking for weakness when it was in the middle, but I changed things around because I think it's easier to see and define weakness when it's at the top, like that, or like that, or at the bottom, like that, or like that. So when you get a fade like that at the top or a fade like this at the bottom, in this case you would sell the open of the next bar, and in this case you would buy the open of the next bar. Okay, so you'd buy that, and in this case here you would have sold that. That wouldn't have worked out. But right here, for instance, you would have sold that. That would have been okay. Right here, for instance, you would have sold that. Would have worked out great. Right here, you would have sold that. Right here, you would have sold that. I think, yeah, that right there, you would have sold. Now, the whole idea behind this is to make your money in the first bar. Alright, the immediate bar that you start trading after you get the signal, that's when you just take your trade and you make your money right in that single bar, right? Because a lot of times it's going to be in the middle, like this one is right here. It's going to be counter trend right in the middle, and it's going to only give you one bar up. Make your money, get your risk off the trade, and then go with it. However, if you happen to have an opportunity that is with the trend, you have one that is with the trend, like this guy, this guy right here, I guess the overall trend right here was down. So you had this one right here, and you can grab that one. It'd be the open of that, you grab that one. You can expect it's going to get down here to the prior swing low. So you can let those trades run a little bit longer. Well, Wayne, the question is, so you trade it when it comes out of the overbought or oversold. Actually, with this model here that I was showing you last week, I'm going to work my way up to everything that I'm going to show you, okay? With this model right here that I was showing you last week, you do it when it fades going into the overbought or going into the oversold. But it fades. It's got to do like this little sideways move right here. This one right here, like that, and like that. Okay? And like this right here. And like this right here. It can do it while it's already in the oversold, like this right here, and this right here. So in this case right here, we'll say right here, you would buy that bar, okay? And with this one, you would buy that bar. And with this one right here, you would sell that bar. And with this one right here, you would sell the open of that bar. So you would sell the open of that bar, sell the open of that bar, buy the open of that bar, and buy the open of that bar. I'll make these. Did I do it wrong? Why is that not? Let's go to settings on this. Make those buys. We'll make the buys a different color than the sells. Okay, because you would buy this one and that one. All right. That's the model that I was going with last week. Now I made some changes, and I'll get into that in a minute. But without looking at price, I can tell you that that's what I would do. All right, without looking at price, those are decisions that I would make, because it faded right here. That means, now right here, the thing that you don't see is that right here, when it did this fade, it showed weakness here, but you had an up close. And when it did this fade, it showed weakness there, but you had a down close. And right here you had an up close, and right here you had a down close. You don't see that in price right now because I'm not showing you price, but those are the other parameters that have to happen. So now I just bring it down, you can see. Okay, let's just bring it down like this. So for this one right here, you had to have an up close on this bar to sell the open of that bar. And for this one right here, you had to have a down close on this bar to buy the open of that bar. And this is one of the ones that's with the trend. You can see that this one right here was against the trend. This was with the trend. This was against the trend. This was when there was no trend. But still, on this one right here, you had to have an up close to be able to sell the top of that bar. And on this one, you had to have a down close right there to be able to buy the open of that bar. You see? Is it different from the range trigger tool? Yeah, it is, Jim. It is different. You know, the range trigger, if I put the range trigger down there, you'll see there are some similarities, of course. You know, it's all using math, so there's going to be some similarities down there. But if I just throw the range trigger down there, you see they're not exactly the same. There are some similarities, but they're not exactly the same. And that was last week's model anyway. I've changed it coming into this. The question was, is the scalp tool different from the range trigger tool? And yes is the answer. Now you can just take the range trigger tool if you want to, guys. If you want to, let me just put that back down there for you. It's not going to be as good. But you can just take the range trigger tool, and the thing to look for in the range trigger tool is when it goes flat. Right? If it goes flat like this, and you have a down close, buy the next bar. If it goes flat like that, you have a down close, buy the next bar. If it goes flat like that, and you have an up close, sell the next bar. Now the places you're going to run into trouble with that is when you have multiple flat spots like that. Okay, so that's going to be in a strong trend when that happens. But that's one way that you could do this with just the regular trigger. But I mean, I would just hold out and wait till I do this, because this is better. Okay, so just hold out and wait for that, because this is better. Missed the beginning. Is this scalp tool available yet? Not now. I probably have it ready for you next week. Okay, maybe by the weekend. But I've got a lot of things that I'm working on, and I want to have it really good when I give it to you. All right. And Tony, is it for new students or people who already have the indicator? Well, it's for anybody that signs up. Anybody that's subscribed, you get it. Tony. Okay, so anybody that is subscribed has access. Well, right now I'm the only one who has access to this, but when I'm done with this, everybody will have access to this. But all the other tools you have access to. You know, all these, if you go in here and under favorites, you'll have the TV trades, you'll have the range sniper, the range trigger, and the swing trade. Those are the tools that you will have. Okay. Now this needs to be refreshed because there's something else in there. I guess it's probably going to be down in here, isn't it? I created a new one today, and I don't see it in here. But anyway, I'll find it later. But yeah, if you subscribe, you get access to everything. You know, there's not different levels of subscription. You're either subscribed or you're not subscribed. You know, there are different levels. You can do it like weekly, monthly, or annually, but they're all the same. You get the same access. Everybody gets the same access to everything. It's just, you know, it's cheaper to do it. The cheapest way is to do it annually. That's 30.7% cheaper than doing it weekly. And doing it monthly is 20.7% cheaper than doing it weekly. The numbers just work out like that. I love when the symmetry in numbers. Please zoom in and go over these in detail. Okay, I'll zoom in for you. So what you're looking at, this is what you're looking for, Sid. Okay, let's do it like this. This was my testing different things. I'm going to get into this because this is where I ended up with 12 wins, 1 break even, and no losses in this span here. I was doing testing. I'm going to get into that, but let me just show you what I was looking at. If I go bar by bar right here, okay. Now this fade right here, you see how it just faded right there, and you had an up close like that, Sid? So you would sell the next bar. Okay, right there. There it is. I didn't even know that was the one. But you would sell the next bar. You would sell the open of the next bar. And you'd expect it to go at least one full bar length. Okay? And this is the ES19 range. Okay? So now, just go bar by bar. And see, this isn't fading going into the overbought right now. So I'm waiting until it fades going into the overbought, going into the oversold. And so now you're down here. Now the next one, you don't see this part yet when it's in real time. You only see, oops, hang on. When it's in real time, that's all you see right there. Okay, so right now, if it does fade on the next one, like this right here, you would buy the open of the next bar right here. You'd buy the open of the next bar. It faded on a down close. You buy the open of the next bar. Okay, there you go. You buy the open of that bar right there. You see, Sid? And then that goes and does whatever it's going to do, and then you're waiting and you're waiting and you're waiting. You don't have to wait long. No, not that long. Okay, so it's down there. It's not an oversold. It's not an overbought. Now here, look, right here. It's about to fade again. It's not fading as it goes in, but it fades while it's in. So right here, you could sell the open of the next bar right here. Right now, you could sell the open of the next bar. Okay, I don't know if that's one. It is one. Look at that. So you'd sell the open of that bar. See if I can move it down. I can't. I'll move it over like that. You would sell the open of that bar right there. Okay, because it faded right here with an up close. So now that's the trade right there. And you go more. Now you see right here, all you know in real time, all you see is this right here. Because these are range bars. And you don't see the current bar in range bars. You don't see what it's doing. There can be entry arrows. I was creating entry arrow job, but it was complicating things a lot for me to create the entry arrows. I had it so it created these lines, these vertical lines on the chart. But again, this isn't the finished product. This is just what led up to it. So I'm still not finished, but I just want to show you what I was thinking, so you understand what I'm thinking. So when you're looking at this stuff, when you're looking at price like this. You're looking at price and price is going up and it shows weakness. I wanted to create an indicator that showed you weakness on the bar before the weakness takes effect. That's what I was trying to do. Okay, so when you see the weakness in the indicator down here, the oscillator, you see the weakness in the oscillator. Price hasn't shown weakness yet because you still got a down close. The price hasn't shown weakness yet, but you have it here. You're oversold, which is a place for it to bounce, and it showed weakness, which is another indicator that it should change directions right here. That's what I was trying to capture. Okay? I think I'll give you a choice. Shahab wanted arrows and Sid wants lines. I think I'll give you a choice. I'll give you both. You can put arrows or lines on. Or both, if you want to. When I'm done. Okay, when I'm done. But, so the idea is, when you see the weakness, when you see this weakness right here, if it's not shown in price yet, it should be shown in price on the very next bar. Okay, it should be shown in price on the very next bar, and that's what I was looking for. Okay, so that's still what I'm looking for. So right now, these are 3 for 3 on these things right here, and if we go over, now it doesn't win every single trade. So don't think that for a second. I mean, over here, see, this is one test that I did. It was 7, 1, and 4. That means it was 7 wins, 1 stop out, and 4 break even. So I didn't want to do that. That's way too many. That's way too many stop outs. And then I reran it again with some changes, and it was 12 wins, 1 stop out, and 0 losses. That's much better. So I like those results. So I'm working with it still. Okay. And so now we just go page by page. See this right here? This shows weakness right here. Okay. You got a down close here. It showed weakness. Now it hasn't shown the weakness in the price yet. But you would buy the open of the next bar. When it showed weakness right here with a down close, you're actually in an uptrend. So you would buy the next bar. Okay, buy the open of the next bar, and there it is. Buy the open of that bar. It pulled back a little bit, but now it looks like it went up pretty good. Eventually, good enough to get some profit. And that's pretty much it. So like right now, there's no weakness there. There, you would sell the open of the next bar after this right here. Right, that one would have stopped you. Let's go a little further. I guess right there. You could have sold the open of this bar. Now this is when I'm trying to get rid of situations like this where you would have this one and then you have one right after it. This one didn't work out. It worked out, I guess, if you sold the open of the next bar. It would have been there right there. So that did work out, I guess. It didn't work out enough to get your stop to break even. And then you have another one right after it. So you'd be selling the open of the next bar right after this. And that worked out for a full bar right away. I don't know if it kept going down. It did keep going down. That's basically it. Right here, again, it faded going into the overbought on an up close. So you'd sell the open of the next bar. Bang. There it is. Okay? That's what I was doing last week. Alright? And I've been doing it all week, and it's been working out really well all week, and I've been using it. But I've been making adjustments to it. Alright? And, you know, different markets react differently. So, I mean, there are periods with this where I would have 2 or 3 stop outs in a row. And I don't want anybody to really have that. Alright? Because I know that really eats away at your confidence in everything that you do. So that's what I'm trying to get rid of. But I mean, if you just go here and you look at it, I mean, at a quick glance, you can say, without looking at price, you can say, if there was an up close, you'd sell, right? And right here, if there was an up close, you'd sell. Right here, if there was a down close, you'd buy. Right here, if there was a down close, you'd buy. And you can tell by the way the next line goes that it worked. You know, so like right here, if there was an up close right here, you'd sell. Right? If there was a down close right here, you'd buy. Go over to here. If there was a down close right here, you'd buy. Oops. And if there was an up close right there, you'd sell. Okay, over here, if there was a down close right here, you'd buy. Oops, that didn't work. Hang on. And now, so that's all good, that's all well and fine. If I bring it down, you'll see that every one of those worked, right? Right here, you'd sell the open of that one, you'd buy the open of that one, you'd buy the open of that one, you'd sell, actually this one here didn't work. You'd sell the open of that one, and that one would have stopped you out eventually. You'd buy the open of that one. So we had one stop out in all those trades. With a higher range, give much higher probability of success. Not so much a probability of success. I mean, this has got great probability of success right here. But, I mean, this is a 19 range on the ES. But if you do go to a higher range on these, you're just going to have a lot fewer trades. But, you know, it's all the same stuff. You're just going to have a lot fewer trades. But if you were to do it on something else, though, Sid, like the NQ, you know, if you just punch us to the NQ, and we go to the NQZ contract, on the NQ, on 100 range, you see you have more opportunities. Like there's a few of them here today. You know, like right here, you would sell the open of the next bar. Bang. Right here, you would sell the open of the next bar. And that eventually worked out. Right here, you would sell the open of the next bar. Right here, you would sell the open of the next bar. Now that eventually worked out too, but it pulled back really deep. It's actually still working out right now. Right here, you would buy the open of the next bar. Right there. See, and right here, you'd buy the open of the next bar. Right here, you'd sell the open of the next bar. Right here, you'd buy the open of the next bar. This went up quite a bit before it eventually closed down. But you see, so it works. It works on larger time frames too. Fades into the oversold or bought. You wait for a down close. Okay, well wait. You see, there can be ambiguity in the fade, right? Is that enough? Is that enough? You know, where did it really fade? This one right here, did it fade right there? Or did it fade right there? Where did it really fade? There's ambiguity in there, right? So I keep working at it, right? Like I always do. Trying to make things easier and better. Look, lines on price. So now I have it doing it where it actually turns. Okay, I changed it so it does it where it actually turns. Let me just change this a second here. Get rid of that. So I have it doing it where it actually turns. So there's no ambiguity about it, right? If it turns down in the overbought and you get it up close, JP, there is, let me get to that in a sec, okay? That's a good question. I'll get to that in a second. So right here, when it flips right here, it's an up close and it turns down. You sell the open of the next bar. All right, right here, when it it's in the overbought, it flips down, you sell the open index bar. Now that one didn't work out so well yet. It's still within range of stop. Your stop would be like one full bar length. It'll be up there somewhere. Not all of these work out either. As I said, you can see a couple of them in here stopped out. That one, went down a little bit right there, but it eventually went up. This one didn't go down much at all, and it eventually went up. This one right here worked out just fine. This one, the green ones are the ones that you buy. The red ones are the ones that you sell. You see? And so there's a bunch of them in here, and I just want to get it so it's the most consistent I can make it, so that you're really, really comfortable when you put the trade on. Can I show the bar? You take a trade on an up trade and a down trade, and circle the area on the chart. Okay. Well, why don't I just take a trade? Okay. If I see an opportunity coming up here, I'll take a trade, and then you'll be able to see the whole thing, right, John? JP, the question was, any way to have more confidence if it will run a bit after these scalps, or if it will just be for a quick scalp? Well, first of all, you anticipate that everyone is going to be like a bar length. Okay, so start with that. If you're in a trend and you happen to get one in a trend that is in the direction of the trend, that was what I was showing earlier, something like I see all these green ones in here and no red ones in the trend. Well, here, when I did it with the other scalp here, with that guy, like in a trend right here, when you get this fade, you're in a downtrend right here, and you got the fade right there. That worked out to be really well right there, right? It worked out really well. So JP, you could see that you're in a downtrend, and you could just look for the fades that are going to give you a short. That one and that one. And expect more out of each trade. Okay? You would expect to swing low at least. Expect it to go from wherever you got into the trade to the swing low. So in that case, that's 2 bar lengths there. It's 2 bar lengths here. It would be 2 bar lengths here, right here. Okay, then I see your question, JP. Alright. So, John, let me answer your question too. In this case right here, if you're using this scalp tool, the way that I was talking about it, you would wait for this fade right here. At the close of this bar, when it fades in the overbought and you have an up close, you would sell. I think I get a circle out of this right here. You could sell this right here at the open. Right there at the open. Okay. And this one be right there at the open. And in this one be right here at the open. That's where you place your trade. Okay, John? And that's for the shorts. For the longs, let's find a long one. Okay, here's a long one right here. You would buy right there at the open. There's another one right after it. You would buy right here at the open. Okay. So in this one right here, JP, in this one right here, you can see that this is against the trend, right? So you'd expect just one full bar out of it. Both of those. But these right here that go with the trend, you'd expect to get down to the swing low. Right? Okay. Hang on. I gotta go back up. There's John, I answered yours. John, JP answered yours. Jim, have I compared profits using my scalp tool to your current trading style in the morning? I want to see which provides higher probability trades. I have not, Jim, because it's just, that's a lot of work to do that. It's what I'm doing in the morning, you mean? Using the midpoint and stuff? I think this is going to produce better results and give you more trades. Today was an example of that. I don't know if you saw it today. Even in the afternoon session today, where I switched to divergent trades down here. Now, you guys had been watching for a while. You remember when the spreadsheet at the beginning of the year, beginning of 2025, when I was getting these numbers in the morning session every day with one contract? Thousands of dollars every day with one contract in the first 2 hours. I was primarily using divergence then, and I was trading a ton. I was trading a lot. And you can still do that if you want to, but Larry, hang on, let me get to your question in a minute. But Jim, no, I haven't done the analysis, but I can tell that this would be better. You'd have a lot more trades in it. I think you'd have better results. It's a different type of, well, I'll say it's a different audience to begin with. In here I try to keep things as simple as possible, and in here you don't really need to learn how to trade, you just need to learn how to use the indicator. Okay, and Jeff, but because the indicator does not update until the bar closes, how would you know it was fading? Well, that's just about it. You wouldn't know it was fading until it closed, so you just have to be ready for it. I'm working on that though, Jeff Della. I am working on that. I'm giving you some sort of an indication, finding some way to give you some sort of an indication to let you know that it's going to change. But I haven't figured out a way to do that yet. Normally I like to give you something that's going to let you know a little bit ahead of time that, that it's just about to be a change. But if I were going to do that, then every time it went up near the overbought, I would have to let you know. But I am working on that. That's what, when you look at this right here, and the aggressive, I'm looking at how long this stretch is right here, and where, not that, but where this is with respect to it in the trades that work out the best. So that's why it takes me so long, Jeff, to really get stuff out to you guys, because I want to give you the best thing that I can give you, and give you guys the best opportunity to be able to take the trade ahead of time, to see it coming so you can get ready for it. So I might even be able to send out an alert to you, or create an alert that you can have that'll let you know that it's coming ahead of time. But I mean, the stuff that you see right here, like this one right here, the scalp tool, I mean, I have that out there. I can make that available, but it's temporary. It would be a beta version. But I'm pretty sure I have that in here. Didn't I put that in here? I thought I did. Let me look under favorites. Yeah, right here. Let me see what that looks like if I turn it on without putting anything on. Okay, it comes out like this. That is pretty aggressive. See, did I give myself any settings? Let me put it in this. And that looks a little more like everything that is up there. Well, I'll have to see what I did, but I do have something that I can put out there for you guys if you really want to get messing around with it. The scalp tool is available. I don't know what I changed in this to make it the way that it is. Oh, I think I see what I changed right there. Hang on, let me go back to the default one. Hang on. Let me put this one back on. Let's see. I think I see what I changed. This. Is that right? It's pretty close. Yeah, I think that's it right there. That's it. Yeah, so I do have it available to you, just with a few setting changes in it. So if you guys, if you're subscribed and you want access to this, or if you want to take the trial right now and you want access to that, send an email to me at support@targetviewtrades.com and just put scalp tool in the subject line, and also give me your TradingView login ID. If you give me a TradingView login ID and you put scalp tool in the subject line, or the TradingView login ID, you can put it inside the body. But if you send an email to support@targetviewtrades.com, if you're subscribed, then I'll set you up with it. And if you are not subscribed, you can take the free trial, and I'll set you up with it that way too. Okay, if you guys want to mess around with it. I am still making it better for you, though. Alright, I'm making it better for you. That's the idea. I mean, I haven't gotten to this part yet. Well, I kind of got to this part, where it shows the lines on the trades and all that. The thing that I'm working on with this is really so I'd be able to give you guys a notification ahead of time to let you know that, hey, you're probably going to get a trade coming up here on the next bar. Do you have to use range bars? I don't want to say you have to, but you're going to have much better results if you do, Tony. Range bars is the best bars you have. That's, if you're looking at a much larger time frame, like a 30-minute or something like that, well, you're not really using this stuff anyway. We have stuff for that too. you can use the swing trade stuff for 30-minute bars if you want to. But the beauty of this, range bars are great because you know exactly, every bar's got to close at the top or the bottom. So you know ahead of time whether it's, what's going to happen. We have to put your orders and all that stuff. Be ready for it. Okay. That's great, Jim. That is great. But this is, this can be really scalpy if you want it to be, but, like right now we're on the NQ47 range. What's it look like over here right now? Using this, there was just an opportunity to sell right here a second ago. Alright, could have sold right there a minute ago. I should probably take some trades in here. It's 3:02 and we've been going for half an hour now and I haven't taken a single trade. Well, it only have one line, you hope. Well, Hal, by default, if you were to send the email to me right now, this only has one line in it. And I'll set it so it has the settings, these settings the right way by default, so you won't have to change anything. Okay. I'll do that for you. Alright. I know you like to keep it simple, so it would look something just like this, and you'd be looking for the fade, and when you get the fade, I'll actually put these in a different place too. Well, I'm right now at 95, but I have it at 80. In here I have it at 80 and 99 and 20 and 1. Because what I was really looking for with this one right here, what I was really looking for is when it got above, got to 100 and when it got to 0. You see, let's see, I think, which one am I looking at? This is going to be the 15. Yeah, right here. If you look at lead div right here, it's at 0 right there, and it's at 100 right there. So when it goes from 100 to 0, it does a full 100 point move like that. I'm capturing information when it does that. How do I decide what number range bar to use? Well, that's a fair question. The way that I do it is, well, there's several different ways you can do it, but I do it so it's easier for me to do the math in my head when I'm putting an order on ahead of time. So if I'm doing it like with the NQ, the NQ has 4 ticks per point, and so I do it a multiple of 4 minus 1. That's why this is a 47 range, because 48 minus 1. That way I know each bar from the bottom of the bar to the top of the bar plus 1 tick, which is where I'd want my order to be, is 12 points. Okay, and from the top of the bar to the bottom of the bar minus 1 tick, which is where I'd want my order to be, is 12 points. So that's how I decide which ones to use for me, because it's easier for me to do the math so I can put my orders on ahead of time and be proactive. But you can use whatever you want. You can use a 50 if 50 makes sense to you. But, for things like the NQ and the ES, which have 4 ticks per point, then I like to use something that's a multiple of 4 minus 1. However, if you get into things like the YM, which is a point per tick, you can use anything on that. You can use a 10 range or a 20 range. What I use in the morning with the YM, I use a 9 range when I'm trading, because then I know it's 10. It's 10. Whatever it's at, it's that plus 10, or that minus 10 is where I want my order to be waiting. Okay, and you can see right here, I just flipped this to the 47 range YM, and you just had a great trade right there. Same stuff. Alright. You see how this one did it on the fade, and this one did it on the turn down? That's what I was doing to try to move the ambiguity of the fade, so you can see when it's actually a turn down. So it turned down, you sell the open. This one here did it on the fade, and you sell the open. See, you have no idea how much time goes into this. But I want to make it as unambiguous as possible for you guys and for me. I make money trading. I make a living trading. This stuff that I do with you guys, where it helps me to teach people, and it helps you guys too. So that last question that I just answered, how do I decide what number range bar to use? That was the question. Okay, that's why I went to that whole diatribe about multiple 4 minus 1. Hal answered your question. Going up. I'm glad you're doing so well with it all, Jim. The swing trade thing is really good too. Now, this is like, the swing trade was one extreme and this is the other extreme, really. You can use this on any time frame you want. You know, last week when we made all that money last week, we were using it on the ES19 range. I don't know that we got the volatility to do it on, I mean, it was FOMC last week when we did that, so I don't really have the volatility to do it on the ES19 range today. But, we don't have any trades here right now, right at the moment. Okay. So you see I don't have anything up here on price. Now, when I originally started TV trades, I found a layout on another computer that had the original stuff on it. All I had was like the background colors and a blue arrow down here or a red arrow way up here, and some text that said to buy the next bar or to sell the next bar. No, Sid. There was a question, Larry, you had asked this question earlier about the background color. I mean, you can stick with the background color if you want to. I haven't found any place where that's going to make it better. I probably haven't looked at it in enough detail, though, to be honest with you. It's working pretty well without adding the background color complications to it. Okay, I want to keep it as simple as possible for everybody. You, me, everybody. Now, ideally what I'd like to have is in here have something with this that will show you when it's like this, when it's exactly like this. You sell the open to the next bar. When it's like this, you buy the open to the next bar. When it's like this, you sell the open to the next bar. When it's like this, you sell the open to the next bar. It's like this, you buy the open to the next bar. I'd love to do that, but you see, it's easy in hindsight to look at that and see that. What you don't see is when it's like this. You know, you would buy the open to the next bar. That one actually worked out, but you don't see when it's like, in hindsight, what you don't see is, well, like this. You'd sell the open to the next bar. That didn't work out so well. Like, I'm going to find one for you. You know, like this. You know, in hindsight, well, in real time, this is going to look like this right here. It's going to look like that. So it has it's a little too close, but, you know, in real time, it doesn't look as clean as this right here and this right here. But one thing I did do is figure out how to, I figured out some new mathematical computations that I can do to capture information when it's like this, when it's just like this, to capture information about this angle and that angle and this angle and all this space down here. So I'm going to make it better. I'm going to keep working on it. I'm going to get it so it's really, really, really good. Alright, again, if you want the scalp tool, send an email to support@targetviewtrades.com. If you're a subscriber, send it and send me your inside the body, give me your TradingView login ID. If you're not a subscriber, sign up for the trial, and I'll have all that information, and just say you want the scalp tool. Alright, send me an email, just say you want the scalp tool if you're just signing up for the trial today. Okay, and again, to sign up for the trial, you go here to tvtrades.com, tv-trades.com, sign up for the trial there. You go to targetviewtrades.com, there's a lot of information at targetviewtrades.com. On here, these Wednesday meetings that I do, they will always be on targetviewtrades.com. You can always sign up for it here. A lot of you guys did this past week, you signed up for it right here. And this meeting, now this is being recorded, and all the meetings that I've done, all the meetings that I do are here at targetviewtrades.com. Go to upcoming and past webinars. This was last week's meeting where I introduced that for the first time. And these are all the meetings before it, so you can go back, you know, a couple of years worth of meetings in there if you want to. All right, and they're not all the full hour and a half meetings. Some of those are an hour, some of those are 10 minutes. But okay, Well, you're still good till the 30th, I think, Shab. I'm pretty sure. Shab, is that? I think. I'm not sure. I'd have to go look and see, but I'm not positive. But yeah, that's all you guys have to do if you want to get this going. Just let me know. It's not done yet. I'm gonna make it better, but you know, I don't have the arrows in this. I don't think I have arrows in this. Do I? I might have some. You gotta put in your password. Now that I think about it. Now that I think about it, I'm gonna have to check the password on that. Make sure the password works. The right password works. Actually, you know what? I don't even think it's gonna be password protected. I'll just take the password off on that, so you won't have to worry about it right now. All right. So, do we have anything we can trade right at the moment? Not when we're looking at it like this. We don't. Okay. There's nothing here to trade yet. Yeah, you don't have the tool yet, but when I authorize it for you, Jim, when I authorize it for you, it'll show up in your indicators invite only section. It'll be in here. Okay, where is that one that I did today? I did one today. I see it's not showing up here for me right now because I haven't refreshed my charts. I did it on another computer, and it's not showing up here because I haven't refreshed my charts. So you're going to have to refresh your charts, and by that I mean just hit this thing right here, and that will refresh them. Okay, like I'll save this right now, and if I hit refresh like that, it's going to bring this back up, and this is the one we were working with. So I'll go here, and now go to invite only, and here's the one that I couldn't see a minute ago, right here. Okay, that's this one up here on top. I couldn't see that a minute ago. That's all you have to do. Okay. Greg, it's support at targetviewtrades.com. Support at targetviewtrades.com. Okay. As long as you're a subscriber, just in that email, just put Scalp Tool at the top, and in the body put your TradingView login ID, and I'll get you set up after this meeting is done today. If you're not a subscriber, then go take the free trial and give me the same information. Okay. The difference, there's huge differences, Brad. One, this is just me. It's nobody else. There's no Dwayne, there's no Valerie, there's just me. This has tools that give you alerts, lots of tools that give you alerts. This doesn't have a live room in the morning. This doesn't cost $5,000. This, there's a lot of differences. This is much cheaper and easier to get started with and to continue using. Now, in here, what I'm giving you are just a whole bunch of tools that you can use to trade with. All right, I'll show you how to use the tools, but I'm not teaching you how to trade so much per se in here. The question was, what is the difference between this and the morning session? Okay. This is the one day a week that you get to trade live with me with this on Wednesdays. Okay. What can this do extra? Well, TV Trades doesn't have this. I mean, Trading IQ doesn't have this. It doesn't have this. It doesn't have that. It doesn't have that. It has a very limited version of that. It doesn't have that. It doesn't have that. And it doesn't have that. Well, nobody has that with me. This does a lot of things that one doesn't. Right? In there you have, well, in there you have TIQ price panel if you want it. You have the slingshot. You probably have the ultimate slingshot, the context PP. Those are the big ones that you use in there, those three. And even the midpoint that I use in there right now is part of this. That's part of the trigger. And the midpoint, you have to be subscribed to this to be able to get access to the midpoint stuff that is used in there. Okay, that I use in the morning session. The actual, when this shows up right here. Okay, see right now by default it doesn't have a password in it, and it doesn't have anything, but if I put the password in, then see, it doesn't have anything up here on price, but this is the midpoint right here. You turn that on and it puts a midpoint on. So you have to have access to this with a password to be able to use the midpoint stuff that I'm using in the morning, because I created that for you guys in here. Okay. Yeah, no, I'm not doing that. That's not going to happen, Jim. I'm thinking 10 years down. I'm thinking 10 years down the road. But I just want to create the best tools for all of us, really. So that is what I'm doing. So let me bump this over so we can look at some other markets too. So we might actually get a few trades in here. Let's put this on. Oops. Q. And we'll see if we can maybe get a couple of trades going in here. Use the Z contract. And I'll do a 19 range on that guy. Okay. And so it just had a fade right here that actually kind of worked on the NQ. It went down some. It didn't go a full bar length, but it went some. No. Oops, I clicked on the wrong thing. Did I? Nah, I don't know. Anyway, so over here right now, you see we're in that divergent state that I was talking about, like this one and this one. We're in that divergent state right now on this. But we don't have any trades right here. Okay, discard. If you just learn one thing, alright, if you only learn one thing, let's do this. Let's save this and we'll create a new one. Okay, let's create a new layout. Say one thing is what I'll call it. One thing. Okay. Now what he said was because of all the stuff that I'm showing you right now, he's getting a little overwhelmed and confused, and that's okay. I get it. You only need to know how to do one thing. Okay. So let's just take this one thing. We can take any one of these tools and I can show you one thing on any one of these tools that will work. Alright, like the swing trade, you just have to put the swing trade on. When you get the black arrow, you take the trade. You get the black arrow, you take the trade. The gray arrows happen before the black arrow to let you know that there's a trade coming up. Okay, it's as simple as that. One thing. Right? That's the swing trade. If you throw the scalp tool on, now I know this looks like a whole bunch of lines and stuff, and this is 19 range NQ. I'm going to change these so they have the setting that I was showing you a minute ago. Oops, like that. Okay, and I'm going to change it from red to blue. I think blue's a little less intimidating. Okay, and these lines, I guess I should probably move them down. Like that. Oh, I can't move them down there. I got to move them in here. Yeah. Maybe I can't move them at all. I can't. Okay, well anyway. So with this, the one thing you're looking for is when it goes into the overbought would be above 80. Let me put an 80 and a 20 on there for you so that is not confusing. Okay. There's an 80 and there's a 20. When it fades as it goes over this, you sell the open of the next bar. When it fades as it goes below this, you buy the open of the next bar. One thing. Okay? You only need to learn one thing. When it fades as it goes over, you sell the open of the next bar. You sell the open of that bar. Fades as it goes over, you sell the open of that bar. Right? Right here. Fades as it goes over, you buy the open of that bar. That one didn't work out. Fades right here, you buy the open of the next bar. You buy the open of that bar. Fades right here, you sell the open of that bar. One thing. That's all you have to learn. So I know I was showing you a whole bunch of things all at once, but you don't need to learn all those things. You just need to learn one thing. And if you can consistently do that one thing, you have an edge just by having that one thing. You have an edge. Okay? And you just have to execute that edge again and again and again. Now there are going to be periods where it stops out. Like there's a couple of spots I saw in here where I thought I saw it really quickly. Like this one right here, for instance. It fades right here, but it keeps going up. So it's the second fade that actually went down. The first one went down just a tiny bit, but the second one didn't. And the second one's the one that made the big change. This one, the fade was right here. So this one didn't work out at all. This one faded right there. It went down a little bit. But if you took it right here, the second one is the one that really worked out well, but you just stop would be up here. So you would have been okay taking that anyway. But if you learn how to do just one thing, and I'm going to make this better so it's more intuitive. It'll be easier for you to see. And you won't be looking for the fade going up. You'll be looking for when it turns down. So it'll be easier for you to see when it turns down. But I mean, if you want to just take this piece that I have done right now, I mean, this works great, and I've made a bunch of money with it. If you want to work with that and run with that until I get it better, until I make it better for you, so I have arrows and or lines and all that stuff, then you're welcome to. All you have to do is send me a message at support@targetviewtrades.com. Of course, you have to subscribe. You have to be either on the free trial or a subscriber. Sharon wants to talk about the stop loss. Sure. The stop loss depends upon what bar size you're using. Right. Typically when I trade in the morning with a 19 range, I have a 25 stop. When I have a 7 range, I have a 10 stop. When I have a 4 range, I have an 8 stop. When I have a 47 range, I have a 60 stop. When I have a 100 range, I have a 125 stop. That's typically how I do it in the morning. And that information is right here. Okay, if you go here to targetviewtrades.com, go under more right here and go to risk management. It's all right here. Different range bars that I use, how big the stop is when I move it to break even. All that stuff is right here for you, Sharon. Okay, I'll show you that again. This is targetviewtrades.com. Just go to the more and click on risk management. Okay, this is how I do it right here. I put some stuff in here about it. And I do that. It doesn't matter what market you're trading or what trade setup you're using. If you're using range bars, you have to have something that's consistent based on the range bar, not so much the market. Okay. There's stuff all over in here, and you have this actual recording right now, discard. But go to Target View Trades. You'll be sent stuff in the email that you get when you actually take the trial. This card to be sent. The email itself is pretty involved. I was gonna break it down, or maybe make a video about the email. I was actually thinking about that because the email by itself can be overwhelming. Let me show you what the email looks like. Hang on. I have all these things in the way on the other screen here. Let me show you what this email looks like. Hang on a second. I'm trying to get these things out of my way. Okay, here it is. What? Oh, I'm in the wrong email account. I did all that. I'm in the wrong darn email account. Here, let me undo those couple of things, and that will get it out of the way for me permanently. Okay, I'm in the wrong email account. Let me go to the right email account. I'll show you what it looks like. Okay, I see a bunch of you guys now that I'm looking at my email. I see a bunch of you guys that asked for the scalp tool. Okay, be patient with me. It's going to take me a little while. I'll get it done to you. I'll get it to you today within a few hours. Okay, but this right here is what the email looks like. This is the welcome email that you get. Okay, and when you get it, it's got this link that's to the range trigger layout. That's kind of outdated. It's got a video to watch about the TradingView layout creation. I talk about things in here, stuff that's pre-installed. I'm talking mostly about the range trigger in there. The new optimized range trigger. You can watch a video about that there. That's a pretty short video. This is, I'm not sure if that's the right password or not. This week's will be added in here, I think. I haven't taken any trades today, and I think we're up to 21 Wednesdays now. But there's all kinds of things in here that you'll see. Now, again, you only need to learn one thing. You gotta join Telegram. You really need to join Telegram, because there's all the automated things that go out to the Telegram channels, all the trades that are automated that get sent out, that you gotta be in Telegram to get those. Alright, the swing trade channel, all these other 3 channels that I have in there. Sniper, TV trades installation, public Telegram channel, that's another one. So I guess there's 5 Telegram channels you can get access to. And website for updates. If you go to targetviewtrades.com, I haven't made any changes on targetviewtrades.com in a long time. I do the weekly change there, but I haven't put anything new. I haven't been updating the web pages on a consistent basis. I have way too many other things going on. But you can go to this YouTube channel. I think that will bring you to the right one. Let me just check it and make sure. Yes, it does. Okay, there was a little while where I had the complete wrong one in there. Well, I had the right one, but somebody had hijacked it and it took you to their thing, which was it's a scam. And a Facebook page if you want to go check it out there. But that's all in here. You really only need one thing, but there's videos in here for you to take a look at. Okay. All right. Which TV subscription do you need? TradingView subscription. The Essential will work just fine. The Essential is, now you're asking about the different ones that you have available. Let me go here for just a second. Let me go here, because I don't think I have them listed individually. Yeah, these are the different ones, right? There's the Essential, there's the Pro Plus, there's Basic, Essential, and Pro Plus, and Premium. Those are the ones that you can use. Now, the prices have changed a lot. The Essential was pretty cheap before. I think it's still like 14 or 15 bucks. You got to get data. You got to real-time data is $7. You get that through TradingView. All right, it's just cheaper to get it through TradingView. It's $7 a month, roughly. You're gonna have to get that. I use the premium version, I think is what I use, and that's this one right here. All right. So you can get away with Essential if you only want to have 1 or 2 charts. You can get away with Essential. Don't do Basic. Right? The Basic is the absolutely free one. Okay, you have Essential, then that's fine. The Basic is the absolutely free one, but if you have Basic and you try to go buy real-time data, the real-time data is going to cost you $30. $30 a month for the real-time data. So, for less than that, you could pay the $7 a month for the real-time data, and you get the Essential for like $15. So you save yourself, $8 or $10 or something like that after taxes. To actually get the real-time data from TradingView and get the Essential. If you go for the Basic, you can only have 2 indicators. You don't have any flexibility with the range bars. They're giving you like 4 different range bars you can use. You can't use any custom range bars, and it's a whole bunch of limitations. And it's $30 a month for the data. Do I trade from TradingView or another platform? I trade from another platform. This is what I trade on. This is actually called Sierra, but I only use the DOMs from Sierra. I love the DOM from Sierra. I actually trade at StoneX. StoneX is where my account is. But, and you can hook directly up to StoneX. They're one of the third-party vendors down here. If you go down here in the trading panel, they actually own like 3 or 4 of these different companies down here. This one right here is mine. But they own that one. They own like 3 other ones in here too. You can trade wherever you want. Okay, JP. But if you're going to trade through TradingView, trade on the chart. Right? If you're going to trade through them to your broker, if you happen to have one of these brokers down here, and you want to use the data that they supply for your TradingView charts, or if you already do use the data they supply for your TradingView charts, and you want to trade using TradingView, trade on the charts. Their DOM is horrible. The DOM that they created, they're trying to, oops, hang on, I gotta connect. I was gonna show you what it looks like here, but I gotta connect to the paper trading thing, I guess, to be able to do that. Got it. Okay. So I'll show you. If you do Shift D, This is what their DOM looks like, and it's horrible. It's really clunky. It's putting any kind of stop on there, trailing stop, regular stop, brackets, all that kind of stuff is just horrible. So you're better off not doing that at all. Trade on the charts if you're going to trade through TradingView. Alright. So I've given you a ton of information and not taken a single trade yet. I may have to go back to the midpoint stuff just to see if we got some trades in here. We might get something here on the NQ. It's possible we could get a fade here, but we're using just a scalp on this one. And over here, we would be looking for we'd be looking for this to turn up on a down close is what I'd be looking for right here on this one. Alright. And so we don't have any trades here right now. I've been answering a lot of questions and talking a lot. Yeah. So again, if you want to have access to the scalp tool, it's going to be this one right here. It's not going to be this one yet because I'm still working on that. But I'm going to improve this a little bit for you, so it'll be one line, it'll be a blue line instead of a red line, and it'll have the settings that I put in there for you already. And I'll actually put the double lines up here, okay, not just a single one, so have all that in place. Gold is moving better than the ES right now. GC, on what time frame is it moving better? It was 7 range. It is actually moving better. You got some pretty good movement right there. Where's my 9 range? I usually use a 9 range on gold. Here it is. My DOM is already set up for that. Alright, so it is moving better. And this actually gave a trade here a second ago. I'm going to wait it out right now. Let me put these other lines on here, down here at the bottom. Okay, so it looks kind of like what I was just showing you a minute ago. There it is. Alright, so what we're looking for now, we already have here, we had 3 of those red ones right there. Now none of those would have worked out if I'd been watching it. But what we're looking for is, we are looking for the fade on this, or for this to turn like right now, to give us an up close, a move up on this right now with a down close here, or for this right here to give us a fade down here at the bottom. And this is gold, so hopefully we'll get an opportunity to use it right now. This bar is going to have to close down for this to happen. Alright, if this bar closes up, then nothing that happens down here matters. Alright. And I'll keep an eye on the NQ too. I gotta find my NQ DOM and make sure I got that handy. I do. So we wait right now. See, we went flat here on the on the NQ. Went flat. It didn't turn all the way up. It just went flat. Right. And it's not really a fade. So we're waiting for this bar to close right now. We'll see if that closes. See, I have the ES in the middle here, but I have something different on it. Let me just delete that and put the next one on there. Okay, this closed up, not down, so that kind of screws everything up as far as those trades were going right there. Let me put a fresh one of these on here. And I'll change that to that. And that. Make it blue instead. So there. Alright. So the ES actually had a fade right here. You got to put those lines on there so you can see the 20 right there. And the 80 right up here. Alright, I'm now on the NQ. Where the heck is it? Now on the NQ. Right here it went up on a down close. So that right there was a spot to buy that. Over here right now, I know this is really confusing you guys because there's just so many things right here. So wait for the line across and wait until it turns around and take the trade. Well, that's the part that's really confusing to you right now. Probably Tony. Not just you, I mean to everybody. The TV Scalp Tool, you wait for the fade. You take the fade, alright, as it's approaching the overbought and oversold. That's when you do that. The 15 TVT Scalp, that takes out the ambiguity of the fade. Alright, so like right here on the ES. This fade right here on the ES is a trade. Okay. And this fade right here on the gold. Where's my gold? This needs to actually turn down on this one. This wasn't a fade, so I'm sorry, I was wrong about that. I'm doing two things at once, so I'm really going to be confusing you guys. I really don't mean to do that. I should probably just do one thing at once right now. So we're all looking at the same thing. Okay, let me do that. Let me get rid of this guy right here. Alright. And let's make this blue. So look at the same thing on all the markets, okay? And we'll do the same thing over here. Because this is one that you guys are getting access to. Those of you guys who asked for it. Let's see, okay on that. Alright, so what do I have going on? I have a short right here on the gold. Where was the gold? It's right there. Okay, the gold, I did the fade on the other thing, so I have a short right here on the gold. I'm going to break even on that. I'm going to lock in 10 ticks on that. That's $1,000 with gold. Now, I did that based on the other one that was just there a second ago. I have a long right here on the ES because we had the fade right there. So I have a long on the ES. My entry was horrible on that. And I don't have anything on the NQ yet. Okay. So we're out with 10 on the gold. And we're along the ES right now. Now the entry point on the ES should have been here at 88 and I'm at 88 and a half. So it's not uncommon for me to get some slippage when I'm trading 10 contracts. But I'm 2 ticks off of where I wanted to enter on that. And it did go all the way up to 89.25. Now with the ES, we're on a 7 range here, so it's only got to go 4 ticks in profit. For me to bump the stop to break even, it's got to go up 1 more tick and I'll bump the stop to break even. It's got to go up to 0.5 and I'll bump the stop to break even. Okay. With the ES. And there it is. The yellow is where price actually is, right there. Okay, so now I'm going to lock in some profit on this. There's 4 ticks. So that's actually $500 for me right now on that. And it looks like I'm going to lock in 8 ticks. Alright, so that's another $1,000. So I got to write this stuff down. Where's my Wednesday thing? I don't have it open. It doesn't look like. Let me fix that. Hang on, guys. Sheets. It's not in there. Let's go in here, new file, open on this one. Monthly. Crap. Hold it. Just give me a second. It's not that one. It's this one. Sheets. Here it is, Wednesday totals. This is what I was looking for. Okay. So here is this. Right, this is the Wednesday total things. Today is 9/24, and so far on the NQ we haven't done anything. On the Russell we haven't done anything. On the YM we haven't done anything. On gold we have 10 ticks, and on the ES we have 8 ticks. 8 ticks. 2 trades so far. So we're up $2,000 with 2 trades with 10 contracts on, or $200 with 1 contract on. Okay, Anybody that wants access to this is the result of the days that I've done these things on Wednesdays since I've been keeping track of it in May. Alright, so far, we're up $2,000 today. We're up 67,375 with 10 contracts, or with one contract, we're up 6,737.50. And that is now 21 days. I thought it was 21. Okay. If you guys want access to this, you just gotta let me know, and I'll give you access to that too. Do I ever hold a run or two on these types of scalps like I just did? Yes, I do. I have all the targets and stuff are in here. Not in here, sorry, not in there. All the targets are in here, in the risk management. Alright, these are the targets that I use. So a lot of times I'll hit those targets, particularly with the NQ. I hit the target. The NQ is one I hit the target the most on. But, you know, I hit the target a couple times today on other things. I think I hit it on the YM a couple times today. I hit it on gold once today. So, you know, I trail my stop. I usually exit my trades with trailing stops. Okay, the question was, do I ever let trades run? Or do I just do scalps? Okay, so, Tony, I just want to clarify for you, what we're waiting for in here is for the fade as it goes into the overbought or goes into the oversold. Okay, that's what we're waiting for in here, like this right here, right now on the gold. I can find my gold DOM. That's a trade right there. Crap, what did I just do with all my DOMs? I just wiped out all my DOMs. Hold on a second. Hold on, I'm trying to find them. Oh, I wiped out everything. I didn't realize that. Okay. Oh, here, my DOM's right here. Oh, kind of right there. There it is. Now I can get it. Is it too late? It was the gold I was looking for. The gold right here. Well, it is a little bit too late, but I'll still try to get it. Okay. Sorry, I kind of messed myself up there. I have a trade on the NQ. Why do I have a trade on the NQ? I have a long trade going on the NQ. I'm just going to get out of it. It's at break even right now anyway. Just fine. I cancel on that. Okay, I did take the gold trade. Alright, the gold trade is right here. It's not working out yet. The entry point on that should have been 58.4 on a minute 58.6, so I'm off by a couple of ticks on that. But we should see that get up to here right now. Now this JP, this should go up to the prior swing high right here. Right after 5 ticks in profit like we just had, I'll move the stop to break even, and now I'm gonna lock in 10 ticks because that's $1,000. 12 ticks, that's $1,200. Anytime I can get $1,000, I'm gonna. Okay, but look what it did. It just got up to the prior swing high. So that's exactly what I expected out of that. Okay, I expected that to get to there, and it did. Okay. Would I sell 8 instead of all 10? Oh no, I don't. Are you kidding? I trade way too much to try to deal with that. I have way too many things going on and trade way too often. You know, if I was trading all by myself, then maybe I could scale in and scale out and stuff like that, but that's just not, I don't trade like that. I'm all in or all out all the time. You know, guys that trade alone, that, you know, they're not answering questions in a room full of people and stuff like that, they might be able to do that. They might have the attention span to be able to do that. Okay, but not me. I'm spread pretty thin as it is. You know, trying to trade 4 markets and answer questions and phone calls and text messages and emails and everything else all at the same time. It's kind of wild. This right here, I should have been going long. Over here somewhere. Just a second ago on the NQ. And I wasn't. So we did that one on gold. We did another one on gold a minute ago. We did this one right here on the ES. And so right now we're just waiting. Okay, what time is it? 3:46. We're getting to the close of business for equities. So we should have a couple more opportunities in here, I would think. Okay, so and I was worried I wasn't going to have much to say. This is actually, this right here was a fade. I could have sold that right there on gold a second ago. See that right there? You see how there's a little bit of ambiguity? That's why I'm making the other thing, so it's not ambiguous at all. Yeah, with the other thing, when it goes down, like that, right there, you would sell the open of that bar when it goes down. So there's no ambiguity at all. So I'm always trying to make it better for all of us. StoneX. What is StoneX? StoneX. StoneX is my broker. They're a huge company, John. They're right down here. Not there. No, I gotta log out of that. Yeah, it's my... I never use this thing. The paper trading. I'm not even sure how to log out of it. Log out. There. They're right here. StoneX. StoneX. Now, some of you guys have been with me for years and years and years. Like, over a decade. And you know that way back in like 2005, it was Daniel's Trading. And then it got bought by OEC. And then it got bought by Gain. And then it got bought by StoneX. So I've had the same broker all those years. He's just changed his business card. And his phone number is actually still the same too. 866-928-3310. You should know your broker's number like that. No, actually, I like the last 30 minutes. The first 30 minutes and the last 30 minutes, John. Those are my favorite times to trade. You think it's an accident that I did this one? But I have one that starts in the morning, it's 9:27, and I have this one that starts at 2:30 and goes to 4. Are we close to an ES sell soon? Yeah, we could have actually. I wasn't paying attention there, Wayne. We could have actually sold it here. I mean, it's not coming from the oversold up into the overbought. It hasn't done a full cycle in here in a while, so it's kind of choppy, but you could sell it right in there. You could have sold it right there a second ago. I guess you still could sell it right here, right now. The last one on the ES, we picked up 8 ticks going up right now. I would expect it's going to get down here to this point right here. Maybe 89.5 on the move down right here. Because if it is going to change direction right here. Now, Brad? I think I'm going to Brad. You had asked me earlier, what are the differences? You already pay for the TIQ, and what's the difference? And in TIQ, I talk about things like, I teach you how to trade, more than just giving you a set of indicators and telling you to use these. But this right here is a bugle. You see how you have a lower low and a higher high? And when you have a bugle, that's usually a trend change position. So what price is looking to do right now is retrace 50% and bounce off the 50% line. So if I had the midpoint on here, I'd be looking for it to get down here to this point right in here is what I'd be doing. Okay, if I had the midpoint on here. Now, this is a down close with a move up. That is usually going to work out pretty well on the gold. That would be a buy. A down close with a move up. Now that's using this guy right here. If we use this one, you can see right here I gave an indication to buy at the open of that bar right there. And I just did, by the way. And that stopped to break even. I knew that was going to give that indication on that one. That's why I jumped on it. But these are the anomalies that I look for. If you have a down close and it moves up, with this one, particularly with this one I programmed to do that. This one, if it does that and it's not programmed to do that, you're still looking for the fade on this, and if it does happen to work out, so you get that, that's going to work out well almost every single time. Right. I missed the fade over here on the NQ. I could have bought the open of that bar right there, and I didn't. It's gone too far into profit right now to try to get that one. But that was a trade right there where it faded right there. Could have bought the open of that and been very much into profit on that. Okay. So I know I've said a lot of words in here, and I've shown a lot of things. I know some of you guys are probably totally confused. Again, you only need to be good at one thing. It could be this thing right here, this one thing. I mean, in the time that I've been sitting here doing this with you now, I did that one other trade, that one that I just did here with 5 ticks on the gold, but the other ones have been trades off of the fade. And doing the trades off the fade, we're up, what were we up, 320 bucks a contract? Something like that. 320 bucks a contract. You know, with 10 it's 3,200 bucks. I just got 5 more on this. So with 10 it's 3,200 bucks. But you just got to know the one thing. And this is one very simple thing. And I'm going to make it even easier for you, removing the ambiguity. And I thought I had put lines on this too, so it would show the lines on the chart. I thought I had done that, but it doesn't look like it. Oh, maybe I have to put the password in. Maybe that's what's... Yeah, look at that. Maybe that's what was missing. Yeah, I had to put the password in. Well, that gets rid of some of these things. You can get rid of that. Oh, look, it puts the other lines in for you too, automatically. You're unclear on last ES trade, which bar you enter on. Daryl. Hey, Daryl. Did you have good weather down there today? It's supposed to rain here. It was really sunny out earlier. On the ES trade. Okay, the bar you would enter on would be this bar right here. Oops, no, this bar right here. The open of that bar. You'd be entering right here. Short. Right there. Is a spot to enter on that one. Okay, and on this one right here, the spot to enter is right there, along the open of that bar. And on this one right here, the spot to enter would be right there. Short. Okay. Now, I didn't do anything with any of those. Well, I did the one trade. The one yesterday. I did this one right here. That's one yesterday that I did do. This is kind of a fade right here, but it hasn't gone into the overbought where it faded. You see that? It did move down 9 ticks before it moved back up. Not yet, Jim, but that is something I'm working on to make that a thing. When you get this one, you know, not only will it have to go a full cycle, but it have to go 100. It have to go from 0 to 100 or 100 to 0. I think. The logic that I'm thinking right now that's going to work the best will be something like that. But I have to finish grading, and I haven't finished grading it yet. I spent so much time doing this stuff. And I enjoy it, but... Alright, so we didn't get a fade here. We did get a fade here, so we should have been shorting the open of that bar. I just missed that one. We should have been shorting the open of that bar. We should have been buying the open of that bar. You see this right here, Daryl? Right here. We should have been buying the open of that bar right there. And shorting the open of this bar right there. Okay, because we got the fade right there, and we got the fade over here. And we got a fade right now. What market is this? NQ? Where's my NQ? Can't find my NQ, Dom. Alright, so we got the fade right in there. Right, this is a 19 range, right? And this is a kind of a fade right here. This is how it's a little bit ambiguous, a little bit of ambiguity in here on the gold. You see how it's just barely a fade right there? But it is one. Okay, and did the NQ actually go down enough to stop? I think it did go down enough to stop out before it moved up. But the gold, I just took the gold trade. Here's a gold trade. Okay, because that was a little bit of a fade right there, and so did I get the right entry? I'm off by 1 tick on that. But I'm pretty close on the gold. And that needs to go 5 ticks into profit and bump that stop to break even. See, with the regular slingshot, this was... You're waiting, fine. In this case, using this thing right here, Darryl, I'm waiting for it to go into it. Now, I don't want to confuse you with all that, because when I finish this thing, it's going to be when it comes out. Okay, but it'll be more intuitive. Crap, I gotta go find my gold dom again. Here it is. Put that window on top. Okay, we going to break even on the gold again. I'm going to lock in 1 tick on the gold. Now, which one is gold? Gold is over here. It should get up to 64.0. It should get up to right here. Okay, I'll just drag my target down to 64.0. And now I'll lock in 5 ticks. Okay, so if we make it up to 64.0, be 18 ticks. Okay. And as I said earlier, anytime I can lock in $1,000, I will. And that's 1,000 right there. And I'm up. So I was gonna write it down there. I gotta get my Wednesday thing. Here it is. We're killing it with the gold right now. Okay. That was this guy right here. Now we missed the NQ trades that we could have taken. Sorry about that. Yeah, I know, Wayne. Having it do this instead of looking for the fade like this, seeing what it actually changes direction like that is a lot more intuitive. I know. I know. I'm working on it. I'm working on it. I hate showing you guys things and then not being able to deliver anything to you. That's why I said if you start your trial now, I'll give you access to it. If you're already in, I know a bunch of you guys already sent me emails saying you want access to it. I'll give you access to it. I'm gonna work on it a little bit before I give you access to it though. I'll make it blue and I'll put in all the other things. Okay. And we only have a couple of minutes left in here. But considering we only traded about a third of the time, we did pretty well, I think. Would I take 4 trades and we're up $4,700 or $470 a contract if you did just one? That is way more than it costs to subscribe. So if you're in here and you're not a subscriber, I don't know why. It's $25. Spend more than that on a pizza. And pizzas don't change your life. Not for the better anyway. You may think they do. Think an entry line on the price chart is easier to see than an arrow on the indicator. Yeah, well, I was going to put, it would be an arrow up here or a line up here, is my thought on that. See, this was another fade right here that I didn't, it's a fade, but you just barely see it on the gold. Right there, you see? It doesn't go straight up. And I actually have, inside this one here, I actually have a thing that measures the angle on that. So you don't see it here, but inside here I have a thing that measures the angle. Maybe it's not inside that one. So now there it is. It measures the angle right there. And finds those subtle differences for you. So I should have taken another short right here on the gold a minute ago. I should have taken a long right here on the ES a minute ago. So I'm working on it and make it easier for you. You'll see. It'll be easier. Alright, so one more time. If you haven't taken the free trial, go to tvtrades.com. You can sign up for the trial here. I mean, you can go to targetviewtrades.com and sign up for the trial here too. I'm not exactly sure where. If you go to the home page, I think you can sign up for the trial. You can click on this free 3-day trial now. Click on that. It's going to bring you actually somewhere on this. It looks a little different. But you can click on it in here. And you get all this stuff too. All the things that you're going to see in all these videos, you get all that stuff too when you sign up. But I'm not covering that right now. You only need one thing, one simple thing. Alright, so just guard if you sign up, don't get overwhelmed by all the things that you get access to. You only need one simple thing. Alright? Alright, did I answer everybody's questions? Can you still jump in on a deeper pullback as long as the profit margin has not been hit? Can you still on a deeper pullback? Yeah, if you want to. You mean when it goes beyond these lines? You can, Jim. Alright, and James, you just made some profit from the NT scalp. The NQ scalp that we had over there. Nice. How have you been doing? I know you grabbed that layout that I had worked on. Yes, with a fade that pulls back before it moves in the right direction. Yes, I think is the answer to your question, Jim. The ES right now. Oh, okay, I see what you mean. So when it does this without that, and then it gives you another one right here, like that. I try not to do that because you'll see that that's gonna, usually you'll end up stopping out on the first one, and then you get the second one. The second one will work sometimes, but there'll be times where if you're in a strong trend, it'll have a little bit of a pullback, and it'll stop you out, and then it'll do another little bit of a pullback, and it'll stop you out, and then leave another little bit of a pullback, and it'll stop you out. So that goes back to the whole full cycle thing. And I haven't worked that into it yet, but if it goes in and it's not faded, and it comes out, you wanna be leery of getting yourself into a position where you're gonna be, if, like, let's say on the way down right here, each one of these gave you an indication to go long, when you're in a clear downtrend. If you stop out one time, then don't keep trading against the trend. Wait until it gives you a valid signal, the next really good valid signal. Okay. I will. I'll do it all in just a few minutes here. Okay, so it's 4:03, guys. I'm going to wrap it up. If you haven't taken a trial and you want to take the trial, go to tvtrades.com. If you want to learn more about any of the stuff that I'm talking about, this video is going to be right here. If you go to targetviewtrades.com, this video will be right here under upcoming and past webinars. It'll be right here in a little while. Okay, you'll also, everybody's going to get an email from GoToWebinar that will have a link to the video of this whole thing that I've done. Again, if you are welcome, Jim. Thank you. Again, if you are not subscribed, take the trial, get subscribed. If you are subscribed and you want to have access to the scalp tool, send an email to support@targetviewtrades.com. Support@targetviewtrades.com. Put in the subject line scalp tool. Put in the body what your TradingView login ID is. Okay. All right. I'm gonna shut the recording off.